Obviously quite topical recently is the recent downgrade by Fitch for South Africa. This is now in line with a lot of the other rating agencies, and subsequently sort of other banks have obviously been downgraded on the back of this. This is nothing new. This is essentially just in line. A lot of South African banks are obviously tracked to the rating of the international, of the sovereign. This didn't really come as a surprise to us. I think sort of most banks had been expecting some sort of downgrade action since I believe September last year, when a lot of the noise first started coming out. Where we are right now is not a big problem. I think where issues and where banks start getting concerned is when their metrics are not keeping up with their peers. So now Standard Bank, I think for a while had been lagging against some of its peers. I believe we have caught up and we are close to catching up, so therefore there won't be any individual action against the bank relative to its peers. So I believe we will continue to hold a similar rating that the rest of the banks do, which is obviously affected by the sovereign rating. On the back of the downgrade, we saw obviously a move in the currency. The rand weakened about 20 cents against the dollar. This is very typical of this kind of news. However, though, the recent move was heightened by the recent strike action at Amplats and other news about other mining companies starting to pull out. This is not so much a South Africa specific story, this is more of an EM story. Traditionally at the beginning of the year, trading desks and hedge funds and asset managers are looking at flat P&Ls, and they're looking at ways to essentially sort of get some wins on the sheet. Traditionally you will see people putting risk on to the books in January. Now, I think with the uncertain environment that's still out there, with the noise in the US debt ceiling and the fiscal cliff, further concerns over Europe still persisting, people aren't as willing to put pure directional EM bets on. So what we saw earlier in this year was a lot of other currencies performing well, with South Africa being used as a hedge. So people putting on relative value plays. So selling rand, buying Hungary, other things like this. This is sort of what contributed also to the weakness in the rand. So you had sort of three factors playing out. You had obviously the downgrades, you had sort of RVEM trades being put on, so relative value, with rand being seen as the short, considering the recent political issues, the mining issues, and everything else like that. And then you've also, and then obviously sort of the Amplats news and everything else. So that was the initial reaction in the FX space. This usually culminates in sort of significant move, and then everyone sort of gets put into the same position, and then there's usually a retracement. I think a lot of other banks are calling for dollar rand higher, and it seems to be the general consensus. And unfortunately, the market is now more so than ever dictated by supply and demand, and I believe everyone is probably the exact same way now in their books, and we probably could see a retracement again. As far as other instruments, there was no impact on the FRAs, which are essentially the forecasts of what the Reserve Bank will do this year. And as far as the bonds, there was a brief sell-off. However, we've seen continued demand from offshore flows, from offshore counterparties into the bond market. I think sort of with the weaker rand and with the high yield still offered in the South African bond curve, that trend of offshore accumulation of the assets is persisting. I'm not sure for how long, but it still seems quite relevant at the moment.